How much is a tenth of a percentage point in an inflation call? Is that a big deal right now?
It's really not. I think right now the market is very much focused on the momentum that we're seeing in inflation, with the expectations for Friday's report that the headline does continue to move towards 7%. The core continues to move towards 5%. So even if you're a PCE fan, a PPI fan, regardless of your favorite inflation metric, I think
Right.
right now the market is focused on the fact that prices are moving higher, and the Fed has now conceded that the word
Right.
transitory needs to be retired.
What? Okay, we can't retire the fact there's a fear about a boom economy. What are the bad outcomes to America of having a China-like 9% nominal GDP?
Well, there's nothing net negative in terms of the economy growing at a faster pace, but we have to look at the composition of the underlying growth. Is this organic growth, or is it temporary growth spurred by out of control government outlays? And so that's really what we need to focus on when we're talking about the growth prospect. At the first half of the year, we saw much more robust 6.5% GDP, but most of that was spurred by trillions of government spending. In the back half of the year, we're now likely to see about a third of that activity. But again, much more organic and arguably then much more sustainable as we turn the quarter into 2022.
What is trend growth, Lindsey, and is that where you expect to get to at the back end of next year?
I think trend growth returns to 2% as we look out to 2022, which is disappointing relative to 6.5% again at the first part of this year. But remember, we're simply getting back to pre-pandemic levels of activity. We tend to romanticize where the economy was prior to COVID-19, but we were already losing momentum. If you remember, 3% in 2018, down to 2% by the end of 2019. So going forward, as the economy stabilizes, it's likely that we do return to that more anemic, but again, more organic 2% growth.
This is crystal ball type stuff, so forgive me for going through next year in any kind of way that involves precision. But I just wonder when it starts to become obvious that that's going to be the trend through next year. There's a conversation now, Lindsey, as you know, that we're going to accelerate the taper. Maybe it ends in March of next year. And then people are talking about rate hikes through the summer. If we're going back to trend, does that start to become evident in the middle of next year? And what does that mean for the rate hike conversation?
I think it does become evident in the middle part of next year. And for the rate hike conversation, I think the Fed is delicately balancing the fact that, yes, they want to quell inflation. Yes, they want to keep inflation expectations in check. But the committee also recognizes that the economy is still very fragile or maybe increasingly dependent on the monetary policy punch bowl. So while they are likely to initiate liftoff at an earlier timeline than previously expected, the ascension to the cycle peak is likely to be very muted, very slow. And that cycle peak could be, what, 2.5%? So we're still talking about historically very accommodative levels for the market.